So you may have or may not have heard the word carry trade rolling around. And today we're actually going to be talking about giving you a very high level overview of what that is and also why a rate cut would be a worst case scenario versus the best case scenario for the carry trade and how broader market participants would actually benefit from no rate cut and why the market's reaction may actually be bullish to it, right? Very, very controversial statement, I know. And also remember that the market today did something just horrific. Simply put it, if you guys followed our weekend deep dive, a link down in the description below where you're going to get all these levels. I'm not going to go over them necessarily in this video. However, I'll give you a very high level overview. And so you guys know what we need to be looking into. Number one, today's close. Number two, tomorrow's close and any news catalyst or anything. You're going to be educated about what the carry trade is on a very high level today. I also will link a video down below to Heresy Financial's channel. He did an excellent video of what the carry trade actually is in a very in-depth approach. So make sure you guys go over to his channel, link down in the description below so you can check it out, throw him a like on the video. But going back to the markets, right? What happened today? Well, let's recap that for you guys. Then we're going to get into what the carry trade is and what Powell is most likely not going to save you on rate cuts. However, again, we have the expectation that these guys are expecting a 50 basis point hike. Cut. Ooh, hike would be brutal. But yeah, the markets aren't having none of it. And my question to you is, have the bulls all died? Are they all dead, right? Where is the fervency that we saw for the previous year? And I can answer that in the explanation of the carry trade. However, I do want to denote something, and we need to keep this in the back of our minds of the context of what the Federal Reserve is thinking. And we actually can get it from the horse's mouth, Jerome Powell himself.
I don't think of it that way. I think of it as, we're actually in a good place here. We're balancing these two risks of, go too soon and you undermine progress on inflation, wait too long or don't go fast enough, and you put at risk the recovery. And so we have to balance those two things. That's the nature of having two mandates. And I think this is how we balance them. It's a rough balance, but it does feel like that. Again, the labor market feels like it's in a place where it's just a process of ongoing normalization. 4.1.
So he goes into talking about what's going on and everything. However, this is where stuff gets interesting. And simply put it, did you hear anything about the stock market in any of those dual mandates? No, he doesn't care about the stock market. He couldn't give two flying you-know-what if this thing fell to sub 400, right, on the S&P. Would not care, right? So now let's explain what the carry trade is. So you got, on one side, you have the yen, and the other side, you have the dollar, right? So the dollar has been going up pretty steeply in the preceding years, right? So if we look at, let's say this trade originated early 2021, all you saw was an appreciation of the dollar, right? So for example, you go to Japan and you borrow yen, right? So Japan's interest rates have been approximately 1%, right? So you're borrowing at 1%, and you're then going to the US and converting it into dollars, which you can then put into simple treasury bonds, right? Or even the difference between the two currencies. So the yen traditionally has gone down while the dollar appreciated, or the yen goes sideways, right? So let's say the yen just goes sideways while the dollar is going up. So you have gone a massive appreciation because now you can convert the dollars that you converted previously back into yen and get paid a relatively good amount, right? Not huge percentages, but when you implicate leverage with that, which is basically going to a bank and saying, hey, I have $100, I want 1,000. So now you can make this trade 10 times over. So let's say you get paid 2%, 3%. Well, on your $100, you're making a killing because that profit is coming to you. You're paying the interest, right? So you're taking the delta. And simply put it, you're making a killing. So what all these hedge fund managers and all of them did is they went and basically borrowed yen, bought the dollar at relatively low rates. Great, fantastic. Then they went to banks and said, I have dollars, I want to leverage out the eyeballs. Banks were like, hey, nothing's bad happening. Green light, let's go. You're making us money. Dollar appreciates, everyone's happy, everyone's living at large and not expecting this to absolutely blow up in our face. And this is how these asymmetric trades basically blow up, right? They end up blowing up the market because so many people get into it. It's literally printing money till it's not. So essentially, Japan hasn't done anything, right? So you're making 5% just by the currency transaction. So you get this brilliant idea, and I mean absolutely brilliant idea. And that idea is to hit the subscribe button down below, guys, and also have bell notifications on so you guys can catch us when we go live tonight at 7 p.m. Eastern and every night subsequently. But again, thank you all so much for that. No, the brilliant idea is you go buy the Magnificent Seven because you're not satisfied with the stinky bonds, right? You're not satisfied with putting it in a 30-year that's earning you 4.2% while you're only paying 1%, so 3% over the course of multiple years. And I don't want to do that, right? I want to get filthy rich right now. And well, to be honest with you, I think everyone would want to do that. But here's where your trade goes completely horribly wrong. And that is simply when the Federal Reserve narrative starts to pivot and then the Japanese bond market basically does the opposite, right? So you're borrowing at very low rates and then you're loaning or basically buying something in another currency that has a high rate of return. But now those rate of returns have gone down while this has gone this way, and you are leveraged out the you-know-what. So that $1 loss becomes a $100 loss. On a proportional basis, it completely blows you out of proportion. And that is how we get to the carry trade blowing everyone up because everyone's getting margin called and there's not enough collateral in the system to basically go buy. So that is why the reverse repo is slowly ticking down lower. As you guys can see above my head right here, the reverse repo is hitting 286,000. We're starting to get into that dangerous territory where things are getting very, very interesting, where we're not seeing necessarily high liquidity, even though people are piling into bonds, right? If we look at the drop in the 2-year, we can see this thing fell off a cliff and there is still lack of liquidity because everyone is running to the bond market for liquidity and also selling stocks, right? So everyone is trying to get their hands on dollars, very reminiscent of 2019 as the reverse repo or the repo facility was created in 2008. Everyone was trying to get their hands on dollars. And subsequently, there's a lack of liquidity and shortages in the market. So what on earth does that all mean for me, right? Because that's why you guys come to watch this. You're looking at it. I try to explain the carry trade as best as I can. If you guys want more detail, Harrison Financials video, link down in the description below as always. So what on earth happened with the market? Well, simply put it, let's dissect this. The first thing you did, and I said this on the stream last night, is I think we're going to sell off and continue to sell off because you came up for a second round attack on that 528.60 number. You got back above it. I actually had a bullish play going on in the market when we were doing that. And yeah, that didn't work out necessarily. Got out for a small loss. However, you see, if we go into the 5 minutes right here, we go 1-2 punch, form an M like Mike, and then just send it down lower. And yeah, that was just horrible, right? Sell, 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 sell. S&P closing down 0.6, NASDAQ 1%, and then futures just continuing that onslaught afterwards. So we're going to see where we're going to land up tomorrow on open. And it starts putting into question, are we going to start tackling these lows? And down here, is the carnage going to ramp up? I personally would stay bear side of the market versus bull side of the market because apparently in the subsequent 4 days, it has rewarded you tremendously, right? So Monday, we open up down here. Yeah, if you were bearish going into Monday, okay, maybe you caught yesterday's bearish play, today's bearish play. Doesn't mean you'd be complacent. but it is looking like you are on the right side of history. And also with the NASDAQ just threatening that 200, that's a full bearish engulfing candle, which is engulfing the previous candle completely. Failed to go above, actually even reached up to that pivotal level of 449.34 and then smack right back down all the way, engulfing the candle, closing down 1%, eliminating all the gains from yesterday. And now we're going to start questioning, is this going to break? Is the 200 going to break? If the 200 breaks, we're threatening bear market territory. And that is not a conversation anyone wants to have, including Tom Lee, because his precious Russell, hey, Tom, I don't think we're having your 40% rally. So just saying, right? Just saying, I don't think you're having your 40% rally. This thing is just going to fall off a cliff because you rejected off the 50-day moving average, 200-day. Next stop, here we come. And also jumping over to the VIX. The VIX kind of looks like, hey, I got some more room to run, right? I ain't dead yet. I'm not below the critical level of $19, which is 200 weekly moving average. And kind of flirting with that 30 number. So again, is VIX getting ready for the 1-2 punch? And is it about to eat everybody's lunch out there? However, I will say Apple not looking the greatest, right? Secondary rejection off of the 50-day moving average. So again, more things are looking to the downside. They're not necessarily looking to the upside. Microsoft trying to get back above that 200, failing today. We got Amazon just cratering. Netflix looking like it still wants to go lower, hasn't necessarily gone there. Google, again, trading down to that 200 could be an interesting buying opportunity down there. But if you're looking at like Microsoft, it hasn't held up. Meta breaking below 50 after its massive push on earnings. So it's just a chop fest like no tomorrow. And also lovely Bitcoin holding on for dear life, touching that 200. So last support, 55,194. If said breaks, then look down below. But then again, don't count Bitcoin out. People have counted Bitcoin out, myself included. And I'm saying if you get above that 56,910, we could have an argument for a bullish run. However, again, that carry trade, everyone is getting whatever banks can get a hold of, they're selling when they give you that margin call. So it could be Bitcoin, it could be stocks, and it could present great evaluations for you guys if you're looking to buy companies cheaper, because they're not necessarily selling what you're able to sell. They're selling whatever they can get liquidity out of. And those more stable names that we talk about on the channel, a lot of these like different companies, they could be at extreme discounts out there. And when has the stock market ever been a worse opportunity than Lumen, right? Lumen completely going up to $7.33. This thing has actually appreciated like 300%, 400%, so be careful if you trade it, right? I personally think this is a pump and dump. However, I'm going to make an update video once this thing kind of calms down, right? There's a lot of volume going into it. I want to see how this all plays out, right? It could be a pump and dump, could actually be a decent buy, and maybe in the future, right? I still personally think this thing is going to zero. I'll admit I'll be wrong, but here's the thing. When people say, like, when we're back here at like $1 and saying, oh, look, hindsight's 2020. Yeah, like, were you saying it's going to go to $7 when it was $1? No, not really. You're saying it now when it's there. So we're going to assess Lumen in a little bit. I want to see how this all floods out once the volume dies down. And then I'll give you guys my opinion on it. And I changed my opinion, right? Who knows? That's the evolving of the market. The same way, if we break above 524.38, I'll be changing my opinion on the market as well and saying that we're going to be going bullish, maybe, right? NASDAQ, you need to get above 444.47. Again, all these levels in the weekend deep dive, link down in the description below for that. So make sure you guys check it out. And again, thank you so much for watching. I hope to see you in the live stream today at 7 p.m. Eastern. And while you're down in the description checking out all those links, throw a like on the video. It really helps the channel out. And then again, hit the sub while you're down as well. Thank you all again. I'll see you in the next one.